Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here at Vox Market. It is Sunday the 5th of December. Starting off with Beowulf, which we've covered quite a few times. Still looking pretty solid above 8 pence. That was the previous price channel top resistance target. And above that looking for 12 pence, which is a longer dated resistance line, which I will just try and serve up now. One from October last year. And could hit that over the next so it's 2 to 4 weeks, maybe even sooner than that, given the way that the shares are currently rising vertically. On to East Imperial, which had great news in terms of the new boss, and here we can see that shares have finally broken that downtrend line that was in place in September, so breaking that line around 12 pence, above 12 pence, but looking towards, I suppose, 15 at least initially, which was the resistance on the way down back in October and in November. Ideally, though, the shares should recoup the decline from back in September, given the change in the fundamentals. Moving along to a stock which is also looking pretty chirpy at the moment, Gtech. Here we've seen the shares crawl up after the break of that triangle that was in place, I suppose, since the beginning of the year, breaking that 21 pence level, then breaking the rising, what was currently rising at the time, the 200-day moving average there at 23, and above the 50-day moving average now at 28, looking for higher prices. That could be up towards the top of the channel there from last year, as high as 50 pence. Maybe by the end of January, that kind of thing. So looking pretty strong there for Gtech at the moment. Not much of a chart on Mila at the moment, but looking interesting. It's always interesting to see a share break out of the opening range. So here the opening range between 2 and 3.4 pence. So looking for 3.4 to be broken, then we could head towards 5 or 6, I suppose, given the width of this initial opening range. So a penny and a half could take us on to 5 pence if we break 3.4. So maybe something to look out for. The longer we stay above the 50-day line at 2.6, the more bullish the idea, or the more likely the idea of a break to the upside may be. On to Oilex, which I haven't covered quite a while, which probably because it's been so frustrating. Here we've got support for the shares, the main support here around 0.16, and above that we're looking for the shares to now return to the top of the recent range at around 0.26. I'd like to see much more than that, as you can see by the old broken rising trend channel that we had, but at the moment probably just best to look for 0.26 while we're above the 0.15 or 0.16 level. Bit of bullish divergence coming in there as well. That might explain why we've had a nice close on Friday. Moving on to a stock which is intriguing at the moment, Pipehawk. But been told that the fundamentals are pretty strong as well, so maybe something to check up on. But in terms of the current technical setup, we've got this broadening triangle, top of the triangle up at 30 pence, and initial target here around 20 pence, which we're nearly there. But if we can break through 20 pence on an end of day or a weekly close basis, it could be up to 30 pence on Pipehawk, with a chart which is rather reminiscent of the Beowulf chart that I looked at the beginning of this video. Moving on to Pantera, and here we've got a situation where shares seem to be bottoming out quite nicely. We've had the break of that resistance line from September and the 50-day moving average at 11 pence. The longer we stay above that, the greater the chance of a move maybe to 21 or 22 pence, which is that old March resistance line projection, basically the top of the broadening triangle that we have there on the daily chart. Moving on to, not finishing yet, moving on to a stock which I haven't covered very much, but seems to be worth taking a look at. Here you can see that the shares have broken recent neckline resistance. That was around the 31 pence level, and if we can hold above that line, then we're looking towards hopefully the 40 pence area, which was old June resistance and pre-June support for the shares. And maybe we could see that over the next month or so. A nice sort of bear trap gap reversal there, crawling around the 50-day line, or along the 50-day line, which tends to be a positive thing to do. And then the attempted break at the end of the week. Personal favorite, still looking interesting. quantum blockchain. Here you can see that we had a key reversal to the upside off the 50-day moving average on Friday, which normally means business as a technical signal, especially when it's at the bottom of the range. But here it's actually just at the bottom of the near-term consolidation, the one we've had since October, and above 2.5 pence, looking for 5.5, maybe by the end of next month. And if you're cautious, I suppose you'd wait for a break of this resistance line there around 3.5 pence. But key reversal, a pretty decent signal in terms of the potential intentions of the shares. Rainbow Rare Earths I interviewed during the week, and so it's worth looking at the charting position of the shares. Here we had a gap higher at the end of last month, and we basically held the gap, found support at it around 13.6 pence, and it moved higher. So on this basis, looking forward to hopefully the shares breaking that line of resistance, probably around the 16.7 pence level, and then retesting the highs around 21 pence over the next month or two. Slightly slower situation there, but looking as though the consolidation here has finally run its course. Moving on to just the last two. First is Tungsten, which gapped higher during the course of the week. In fact, on Friday, but although it did actually gap higher before then. So beautiful bear trap reversal, gap reversal there at the end of last month, and pushing through the 50-day line and then hitting the 200-day moving average on Friday. Could see the shares up to 38 pence as an initial target, and then up to 44 by the end of next month, especially while we hold above the the bottom of that gap there at 30 pence, which was left on Friday. And I suppose we're only really bearish if we go back below 27 at the 50-day line. So looking quite encouraging for tungsten at the moment. Finishing off with Tern, which has not had a good week, with various news flow coming in. Here we can see that the shares have come down to what is probably their last chance for a reasonable recovery. Floor of this trend channel, falling trend channel from May. Some interest there around 13.5 pence, and if we can hold Thursday's low at 12.75, then there is a chance of recovery. The main reason, well, two reasons for possible recovery here. One is the way that the 200-day moving average is still rising at 18 pence, and the other is the way that the RSI went down to sub 20 level temporarily. That's the lowest it's been for the last year, as you can see on this 1-year chart. And so that does suggest that maybe there will be at least an initial reaction to the upside, even if we then fade again after that. Initial target here up to 18, and then we've got 22 as that resistance line, the main resistance line from May, which was where the stock was not able to beat over various months. That's it from me today. More updates during the week.